Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for April 20th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. One thing to keep in mind with the ES here, we've basically been, after the major rally, we've basically been holding flat, but we've also been forming lower highs. That's something that's very, very important to keep in mind. We also have a very important pivot, which was 53.54. 53s from this midpoint of this key range and 54s from this lower edge of this key range. Very important, and right now price gave it up and has not been able to get back above it. One last thing here. Look at the previous session's range here. Price got beyond 1, 2, 3-day highs above 47 and began to fail. Once it failed, it closed near the lows of the session. That's very, very bearish. Anytime you have a downtrending market, which this is, very quietly downtrending market, and you fail to hold above the previous high, there is selling pressure that likely comes. So here's the deal. Right here at 40 half, that is where bears are currently defending or attempting to defend in order to push this thing lower. So that's the early pivot right now where bears are defending on a swing basis. Even though I mentioned before, very difficult to negotiate an entry in the middle of this sludge at the moment on a swing basis. Right now, bears are trying to get something going off 2340. Here's a look at the intraday chart. On an intraday basis here, you can see that price is pushed higher. In the overnight trade, we've gotten a higher value in the, or rising value in VWAP. Price back to the previous session's closing value. So right now, all the way back to 2340s, this is the level, and chopping around 1 and 5-day VPOC. So this is the key zone here between 41 and 42, right in that area where bears are just going to continue to defend. It could be multiple rotations, and that could eventually lead to a retest of lows at 32 and perhaps even lower. Above 43 or above 42 opens up a return back to 50 and perhaps above. All right, let's take a look here at CL. CL had a significant sell-off in the previous session. Very timely sell-off considering that pre-market we were looking at the PivotBoss ADR, advanced ADR indicator. I noted how narrow that 5-day range was. We got down here, we can look at the 5-day range on the advanced ADR, so I can double click this here, make this a 1, 2, 3, 4, 5, click OK, and now this is based on 5-day range. We talked about how that right there implied very, very narrow compression of the price range, and we should be looking for expansion soon. I noted that it would be, given the upward trend, if price were to push down first and fail to hold, that could be a great slingshot move, but that didn't happen at all. Price pushed through 52.5, pushed through the previous week's low at 52.29, and never looked back. Never looked back. It became a trend day down. Huge move overall, reaching 50.51 after being just above 53s on the day. So a major, major sell-off. You can see how price went 100% of the previous week's range, reaching S100 on the PivotBoss pivots. Now here's one thing to keep in mind, 50. Very important pivot there. You can see that's the previous high, and then price pushed through it, made its support here, and continued. 50 still very, very important for crude oil. Anytime you see a major sell-off like you do here after a strong trend up, this is what I call the extreme reversal, where you pull one side of the rubber band here, stretch the rubber band out, let go of one side, and this thing will snap back. So right now, depending upon how today finishes, we could be looking at the beginning of what could be a return back toward 53s and perhaps into 55s. So 50 is going to be the key here overall. That's the major pivot. So I just wanted to provide a little bit more analysis based off of this recent move because it's a big move. Typically speaking, after you see a major day like this with a wide range, you typically tend to see quieter trading in the day or two that follow ahead of the next key move. All right, let's look at the intraday time frame here. On an intraday basis, We have a flat VWAP. One thing I always look for, if VWAP and VPOC are equal, you likely have a trading range day. So right now, sideways VWAP, you can see chop above and below. So at the moment, it's fade new highs, fade new lows in crude oil. And that's, again, after a major day like this, you tend to have a quieter chop day. So today could be more of a trading range day that sets up for a bigger move to come. Look to fade the edges. All right, let's take a look here at the NQ. Here's the NQ. This one had a significant drop the previous session as well, but it wasn't as big as the ES in that it turned into a huge bear day. This one actually closed above the open, but a major rejection, and it occurred just shy of our 32s. We were talking about 32s as being target up here. It came just 5 ticks in front of that level and then turned around and sold off significantly, closing back below the intraday key range. So just a significant rejection. 1, 2, 3, 4-day highs. Price pushes above those 4-day highs and closes back below. That's bearish. Right now, price is above the midpoint of the rejection day. You do not, if you're a bear, you'd rather not see price get much beyond this level, and you want to see price getting back below the midpoint at some point fairly soon. That's 54.10s. So 54.10 is kind of the pivot right now, and you'd like to see bearish trap and push this thing back down if this thing's going to remain bearish given the current trend. I did mention before, anything in the 54.40s, still an opportunity for bears to defend until proven otherwise, because right now that's been where rejection has been, and the expectation would be to return price back towards support, at least short term. So right now, 54.10 is going to be the key pivot to watch. Looking at the intraday time frame, there we go. On an intraday basis here, you can see how prices bounced and rallied. We had a very strong trend the previous session. Right here, right there is where we had a new high, and it failed to hold, and it was just shy of those 32s by 5 ticks, and that's when price pulled back when offered through VWAP, and things changed dramatically as this thing sold off. We've since seen a bounce back up, and now again we're back at that level where things sold off yesterday. So this is the zone, 54.18, 54.20, where bears want to keep offered, and eventually, again, this is the midpoint of the previous session. Bears want to trap up here and eventually get price back below 10s in order to get this thing going downward. Otherwise, we have a wider range that's built out from 53.90 up to 54.30 and even into 54.40. All right, let's take a look at gold futures. Here's a look at gold. We've got a very tightly coiled price action. One thing I talked about with gold was we could be looking at some sort of slingshot effect where if price, given the current trend, if price were to break this range downward and close back above, that could be an opportunity to squeeze. And I mentioned, excuse me, we could be squeezing toward 1300, 1306. Maybe that could even get us as high as 1335, 1338, etc. Over time. So that started a little bit yesterday when price spiked below 1280, bounced back up, and then you started to see an absorption signature develop. So that's still developing. Today's day 2 of that. So I want to bring you down because this is a swing opportunity that could lead to a nice move here soon. Now, here it is. You got the big push down. Here's 1280s. Major push down. You also see right here absorption and boom, move up, and then this right here was the absorption signature off to the right where this thing led to a move higher. That's what we caught in the trading room. And then right here, that became the zone to absorb the rest of the session. That's where bulls have positioned themselves. So at the moment, this is where bulls are positioned. They're looking to squeeze higher. You got to get, start pushing this thing back above 1285s. We have compression going on. At some point, that could lead to a significant move. But keep in mind, because you have a lot of bulls that are positioned here, that means you have a lot of sell stops building below 1278s. Any push through here could trigger a major continuation lower. So right now, this is the do or die zone. Bulls are looking to keep it bid for a swing move up in the 1300. Failure to hold 1278 could spark a significant push downward. All right, quick announcement. If you haven't made your way over to PivotBoss Masters yet, please do. We have a great deal going on right now for PivotBoss Masters, our premier training for traders. Price increases here April 21st up to $1,500, but you can get in right now. Lifetime membership to get into this training, $995 right now. You can save $500 before the price goes up. There's also an installment plan right now. You can get in for as little as $331.67 on a first payment, and you can have some fantastic training, core training, proprietary training, access to our proprietary tools and indicators, and also a free month of our trading room. So a great training program here for you all. Please give it a look if you haven't already. And I've already gotten fantastic feedback from those that have gotten in here over the last week. So great feedback from those around the world here. All right, thanks a lot for taking a look here. We'll see how this thing plays out heading into the rest of the day. Good luck and trade well. See you soon.